Oh, that's real good.
Hello everyone, and welcome to our channel Penny Lesson. We talk about everything finance, from tips on making money and proper investing to news about the different economies and situations affecting the global markets. The goal of this channel is not only to teach you how to be more financially responsible but also to teach you how to be more aware of global events. So why not just sit back and relax while we tell you what's happening in the finance sphere? Be sure to subscribe to my channel and hit the notification bell to be constantly updated on my latest videos. Remember, one penny lesson a day keeps being penny less away. The global economy is currently under fire due to recent global events. Stocks are crashing, and everybody's panicking. Here I have compiled a list of stocks on which the big names in investing have placed their money. Before we begin, I'd like to clarify that this list is purely based on my opinions and research. This is not in any way to signify that all these stocks will grant you massive returns. At the end of the day, the stock market is still highly volatile. Always practice caution and proper risk management when investing. That said, let's get started with the list. Adobe is the first and is ranked 10. As a result, the corporation that creates software products like Photoshop, Premiere Pro, After Effects, etc., has a substantial moat. Adobe received investments from 7 large investors despite a 20% price decline in Q2. Quite a decline. The following company, Bancorp, is listed at position 9. Notably, Warren Buffett and Charlie Munger now own more shares. 7 mega investors joined as the stock fell 13% during the second quarter. 8th place went to Netflix. Remarkably, 7 big investors are reinvesting, given that news stories from this quarter said that Disney Plus significantly increased members. Netflix is losing subscribers, but if you dig deeper, Netflix is the most widely used streaming provider. They outperformed YouTube in viewership and have a larger audience share than the competition. They generate significantly more revenue per user when compared to other streaming platforms. Super investors will probably be attracted if you combine that with the share price dropping a startling 53% in Q2. Following that is PayPal, which is listed in position 7. Once more, this is a strong company. Therefore, 8 prestigious investors opted to purchase. Because of its large user base, PayPal holds most of the online payment processing business. The stock fell by over 40% in Q2, so I'm not surprised to see the big investors getting involved. The 6th place company is Booking Holdings, which was once more purchased by 8 of our top investors. A group of businesses in the travel sector called Booking Holdings includes Kayak, Agoda, Priceline, and OpenTable. Like many other travel-related companies, they suffered considerably in 2020 and 2021 but are now fully recovering. 8 excellent individuals recognized opportunities throughout the quarter based on the stock's erratic performance in Q2. We finally arrived at the top 5. The first 5 were rapidly covered, but I want to concentrate more on the first 5 purchases in Q2. Disney comes in at number 5 in this scenario. 11 large investors chose to invest in Disney after the stock price fell 31% in the second quarter. This is due to the increased number of visitors to their parks. Due to a rise in admissions revenue year over year, the operating income for their parks experiences and products division significantly increased from $356 million in Q21 to $2.2 billion in Q2 this year. And as a result, their CEO, Bob Chek, even suggested that the demand is now big enough for them to start boosting prices at their parks, which is the best indicator for that section. A 15% increase in operating income from their domestic cable and television businesses was another something we noticed. Their parks, television, and cable are all doing well financially, making them 2 significant enterprises. Additionally, the success of their streaming operations has led to the registration of 15 million additional Disney Plus subscribers, which means that price rises will soon be implemented. The financial outlook in this industry now remains not favorable. The operating loss from direct-to-consumer climbed from $1 million to over $1 billion over a year. But remember that Disney Plus has intentionally undercut Netflix up to this point to attract as many consumers and as much market share as possible. In other words, they are deliberately being struck. The management group now thinks that they have attained that 150 million customer critical mass or market share, suggesting the price rises. They can focus on increasing the average income per user now that their streaming activities are successful. In the long run, I think the stock's Q2 loss of 31% attracted many of these great investors. It won't ever be 10%, 20%, or 30% more significant, even if many of these outstanding investors are only betting on stable gains over a lengthy period. Microsoft is number 4 on the list. Because of all its applications, Microsoft has a strong and diverse switching mode. Simply glance over all of their available software. As you can see, a lot is expanding steadily on all fronts, notably in terms of their cloud solutions. 8 mega investors bought Microsoft shares despite the stock falling 17% during the quarter. Therefore, this is just another example of savvy investors making a fortune off the market crash to buy a top-tier business. Examine how free cash flow, equity, and revenue have increased over the last 5 years. Next, look at the capital investment return for the previous 5 years. They have a 24% management stake, $100 billion in recent cash infusions or investments, and only $50 billion in total debt. They are, therefore, not at risk. 0.4 is the debt-to-equity ratio. It is easy to conclude that Microsoft is a well-functioning machine. Moving on to Wall Street, Microsoft currently has a valuation score of 5 out of 6, and the critical discounted cash flow shows a good discount. This does not mean purchasing it immediately without doing your homework. However, it does assist you in comprehending why renowned investors did not hold back within Q2. Amazon was the third most bought stock in Q2, so let's move on. 15 of our top investors made Amazon investments in Q2, and we noticed a similar trend. The weakest growth rate for a quarter since the dot-com bust in 2001. Its revenues climbed by only 7% annually. Investors were concerned that macroeconomic conditions were limiting the average consumer's desire to spend after the stock price fell by roughly 27% in just 2 weeks. Don't get me wrong, it's possible. Again, Q2 revenue climbed by only 7% annually while online shop spending stayed the same. It shows how much a stock might move in a single direction when market participants are worried about a short-term macro scenario. However, there is a chance for long-term investment here. Okay, following that, we still have 2 businesses. Unsurprisingly, Meta is in second place. The idea of Meta is fascinating. In Q2, 17 of our esteemed investors bought it. The stock price fell by 30%, and there has been no rebound as of this writing. Who would have thought that Facebook would have a P of 13 just a few years ago? Hey, yeah, there are a few reasons why we are here. First, restrictions on data tracking for advertising were tightened by Apple and Google. Budgets for large advertisers and a sizable investment in the development of the metaverse are impacted by the macroeconomic situation. This project will harm Meta's finances for many years. In just Q2, Meta's Reality Labs division lost $2.8 billion. According to a recent prediction by Meta, the weak advertising demand environment we experienced throughout the second quarter will persist. They attribute this to general macroeconomic instability. Because of this, Meta is at the top of this list. You will be aware if you are a long-term investor with reservations. However, keep in mind that most market money is focused on the short term. As long-term investors, that is how we find these substantial mispricings in reliable companies. The only thing that's worrying is the short-term cash. They also have $12.7 billion in cash on hand, $28 billion in short-term investments, no long-term debt, and a solid ROIC history. Getting into trouble when you have money and no obligations is challenging. Let's go on to number 1 now. In Q2 2022, Google was the stock that our super investors purchased the most of. 24 of our total of 79 super investors bought stock in Q2. Overall, 16 super investors bought the share, 13 bought the Class C share, and some willing investors purchased both. What distinguishes the share class, then? They only differ because Class C shares lack voting rights, whereas Type A shares do. In any event, out of the major investors, only Lilu showed substantial interest in the Alphabet in the previous quarter. In the line to sell off, it was significantly undervalued, down 22%. The financial information provided by this company is the best I've ever seen for a publicly traded stock. Even if the economy collapsed, Google would still run its business as usual. For instance, the average revenue increase over the last 5 years is shown by 24% earnings per share, 46% equity, 13% free cash flow, 2% average return on investor capital, and 18% of their $125 billion in cash or short-term investments, and only $15 billion of their debt is owed. The best they can get is 0.1 for their debt-to-equity ratio. So, this business is great. Their Q2 earnings indicate expansion in this regard. They saw that large advertisers are raising their advertising budgets despite the recession, which is optimistic given that they produced a 6% gain more impressions during Q2 and a 2% increase in cost per impression. As a result, the stock's value declined along with the market. The super investors evaluated the circumstances and thought that this was a reasonable offer. I suppose that's it for today's video. If you have any thoughts to share, stocks to recommend, or whether you agree or disagree with my picks, let me know in the comments below. Wow, was that news? Why not ponder it? Want to know the latest? Comment if you want more articles like this. This video is just one of many videos on my channel that brings you the latest news about the world of global finance and economies. So go hit that subscribe button if you don't miss out on content like these. If you enjoyed this video, please hit the like button. Thank you for all your support, and I'll see you again next time. Remember, 1 penny lesson a day keeps being penny less away. Cheers.